it's a bad start. That's what you would say. That it's a bad start and it's a choppy start to the day. Charandeep Singh, Managing Director and Founder with Girik Capital, and his partner Varun Daga. They both join us now. Let's take our conversation forward. Gentlemen, good morning to both of you. Thank you for joining us. So Varun, what is the positioning like at Girik Capital for the year 2022? 2021 was a good year, great year, and an easy year because as long as you participated, you made money. What is the playbook for this year looking like?
Sure. Good morning, Nikunj, and wish you and your viewers a very happy New Year and a great 2022. So, yes, 2001 was really simple, easy, a lot of opportunities to make money. We feel that 2002 will obviously not as easy, but yes, there are opportunities. We are looking at about 850 rupees earnings for FY23 for the Nifty. So it's about trading at about 2021 times, which is not cheap. So we feel that it's fairly valued in that sense from a broader index perspective. So one has to work hard to make money. You've got to find ideas. There will be companies going down. There will be companies going up. So one needs to cut through the chase and get to the right industry. Focus on leadership. Focus on earnings acceleration. And we feel there will be many opportunities where we'll be able to find it. And see, I think it's very easy to be a pessimist where you can talk about tapering inflation and a lot of other factors which are coming in like interest rate hikes from central banks. Yeah, these will play out, but I guess it's the best policy to be a little optimistic, and we at Girik are always trying to find those opportunities where we can make money.
Sandeep, good morning to you as well, and let me extend your greetings to you as well. Thank you for joining us, and hope you have a wonderful year ahead. I'm just going to talk about, first we have got a sense from Varun in terms of how this year would be a stock picker's year. But in terms of the anchoring of your portfolio, let's say January 2021 versus January 2022, what is different and what is constant?
I think, the broad theme of our portfolio has been very technology. I would say two broad themes to the portfolio. One is the portfolio has generally remained quite technology heavy. It continues to be so. I would say for the last 1 year, that has definitely been the primary underlying theme. You also have had, Girik as a house being very underweight the financials now for a very long time. I think I would go back to almost 2 years pre-pandemic. So we have had very select names, but I think we've stuck to the large leaders, where we believe survivorship is not an issue and reasonable growth is not an issue. So we've stuck to the top 3 odd names in the private space and maybe one name in the PSU space. And again, the overall stance with financial services has been quite one of guarded optimism. We do believe that there are better places to position oneself. And like I mentioned, for us, technology has and remains a strong theme across various verticals in technology, not just IT and IT services.
Varun, I can see that Reliance has become your key holding, one of your top holdings. Now, this could be an interesting year for Reliance, and I'm picking it up from what we heard from Mr. Ambani late December, where he's talking about change of leadership and next generation taking over. There is a buzz that we could be in for big change in Reliance also. So in the light of what you heard from Mr. Ambani versus where Reliance is in terms of a life cycle and a business cycle, how would you, let's hear your thoughts.
Sure. Nikunj, we've always liked change. Change is always welcomed. And Reliance is a mammoth. They have everything in place. They've managed to pivot into businesses which nobody believed they will succeed, but they have. We've seen them do it with Geo and now with retail. and they are entering newer segments. So they've always been ahead of the curve, and they are able to execute the way nobody else have been able to do it. So we really feel that they've got it right. Also, they've understood that the traditional business which they have, which is the cash cow, is not the future business. So it's very hard for people to understand that, and Reliance has done that. So that's why we like it, and they've managed to be leaders in whatever they do. So we feel that it's a company, it's an anchoring position. It might not be your biggest winners or your multi-baggers or anything like that, but I think it's a good one to have it in the portfolio. All their businesses are good and growing very fast, and as it gets scale, it gets better. So if you look at telecom, as it gets bigger, it just gets better every day. Retail, as it gets bigger, it gets better. So and both are very, very large businesses. So we really like the company and where they're headed.
So that's as far as Reliance goes and what you've been talking about. But you've talked about Varun, about being tech heavy as well, and not just going it through the traditional way. And one sees your portfolio, and you see names like Zomato over there as well. What will be the strategy going forward? I'm asking this question also at a time when the Nasdaq, we've seen one of the worst sell-offs since February of last year. You're seeing the new age companies also fall off their issue price as well over here, and a healthy pipeline of IPOs.
Sure. Thank you so much. I think this has been everyone really questions the whole position on Zomato, and a lot of these tech companies, yes, they have been expensive and very, very tough to value some of these companies. But where we've ignored a lot of these and let go a lot of these companies, we have liked Zomato, and we started with a small position. Uh, we feel that the business momentum is very, very strong. It again, as it gets bigger, the size of the opportunity is huge, and as it gets bigger, it just gets better. And it's a two-player market, very tough for a third player to come in. So a lot of things going for it. Leadership is out there. The acceleration in growth is amazing. They're growing at 20% every quarter, and I think it's as it gets bigger, you will see earnings come in. So we really think that over the next 3 to 4 years, you will start looking at serious cash flows from this company.
Charandeep, you seem to be playing most of the auto story through Tata Motors. Now, in last couple of sessions, and I'm asking this because, one should think more long term, while Tata Motors has overtaken Hyundai to become the second largest passenger vehicle maker in the month of December, a lot is also being said about its valuations and how it's going to go forward. So I thought it's quite interesting that you're playing the entire auto story through Tata Motors.
Yeah, I think Tata Motors is an interesting one. I think we mentioned this on your last show as well. But basically, there's three verticals, as you know. There's an international business, which is JLR, which is a tough business. It's very competitive, and it's been very low on cash flows. And it will continue to demand a lot of capex. So, that's not necessarily the reason why we looked at something like this. We were actually quite intrigued by their entire effort on the passenger vehicle side. And we see it as a true challenger. It's not a leader by any means. It doesn't have the kind of scale yet that is required to turn out a lot of profitability. And as you know, this business requires a lot of investment, constant investment and reinvestment, because models keep changing and technology keeps changing. What we liked was that they have gone out and built a very neat, sort of pipeline of models, and a few of them have been launched and have been very successful. Now, as startup flexes its muscles and reaches every corner of the country, to build out its distribution, to sell these models to the Indian consumer, it should actually hopefully work in their favor, and they should be able to scale up. Secondly, there's a huge trend change away from what the Maruti buyer wanted all these years, which is largely the small car and up to the 6 to 7 lakh rupee vehicle. I think Tata took a call that they want to go into hatchbacks and SUVs. It's working very much in their favor. So they have high technology models at the right price, which they're rolling out to Indian consumers. They've also got an EV strategy, which is very early days, and that they've partnered up with a foreign capitalist to basically capitalize an entity which will roll out EVs to Indian consumers. So I think there are multiple triggers on this front. And with the kind of management they have and the trial and error that they've gone through over the years, there seems to be a strategy that is really working for the first time. Like I said, early days, I think we'll have to watch the execution over the next few years and see how it plays out, because ultimately it has to show up in profitability. And we're hoping that happens pretty soon.
Sure. Varun, I'm curious to know, given that there were 66 IPOs all through 2021, and I was reading somewhere that there are 22 lined up from now up until mid-Feb. Any IPOs that you're particularly keen to investing? I mean, the valuations aside, but any stories that you're tracking closely? And I don't want the obvious LIC kind of answers here.
Oh, look, we are always looking for IPOs, and we actually run a separate screener for IPOs. So what we've seen in the last, especially in the last few quarters, the valuations, yes, have been extremely, fancy. But we are getting new businesses every day. So a lot of IPOs that have been listed, whether it was Nykaa or Policy Bazaar or Zomato. I think these are businesses which Indian consumer or Indian investors have never seen. Keeping the valuations aside, I think you always get an opportunity in the market, one big correction or one big bear market. Everything comes at a price, right? They all come to your price where you want to invest. And at that time, nobody would want to invest, but probably that would be the best time. We really thought that Policy Bazaar is a phenomenal business. Zomato is a phenomenal business. Nykaa is a phenomenal business. But we have to wait for the right time, right price. Also, a lot of execution needs to be done, right? There's a lot of promise, but one needs to see how they deliver on that promise. Again, there are a lot of IPOs that are coming and that have come on the data analytics side, like Latent View, Happiest Mind, some of those companies which are again valued very, very expensive, but you can't get scarred by the expensive valuations. You need to understand how these businesses are. Can they be in the next 20 years be like what Infosys or TCS have done, right? Because there's a lot of tailwind in some of those sectors and stocks. Then there are companies which are more SaaS based, which are coming with IPOs. So the recent one was something called RateGain, which was interesting. Earlier we've seen companies like Intellect, which have been large winners. We feel that again a very, very interesting theme, which again the Indian investors have never seen, and these companies were never listed. So I think what a good market does is it just throws all these good companies. It gives a lot of these private equity investors an exit. And I would say that in the next couple of years, you will see some great entry points in some of these businesses. So we're always on the lookout, and IPOs have always worked for us, whether it was DMart or it was Jubilant Food or Angel for that matter. It's always worked for us. So we're always on the lookout for this.
Okay, Varun doesn't seem to be in the mood of answering which are the IPOs ahead that he's keeping on his radar, but I'll leave that for some other day. Varun, I'm just wondering, how is it that you're keeping and staying put here in Bombay? Because I remember bumping into you when I think both of us were getting a visa to Austria. So I know you're an avid traveler. How is it that you're holding put?
Yeah, no, I was in Dubai, and I've spent a lot of time there. And last lockdown, I was in Goa. I was working out of Goa, and it's quite amazing that you can be so efficient when you're not working from office. But it's great to be back, and it's great to great to be with the team, and with we are also expanding our team. We've just hired a new CIO. He was a CIO with Edelweiss, and he's just joined us. He has like a 27 years of experience. So it's always good to come back to the team. But yes, I have been traveling and working remotely. It's a lot more efficient, I feel.
It's been such a fascinating times. Who's working from home? Who's not working from home? Who's actually not working from home and also not working from office? You don't know. I mean, digital technology has changed so many things. The first thing I ask these days is, "भाई काम कहाँ से कर रहे हो?" How come your background is similar? Are you the same place, both of you?
Yeah, we are both in office actually, in separate cabins.
Okay, चलो कोई घर से कोई ऑफिस तो जा रहा है. Some of us are still actually working from home right now after the COVID crisis. So, okay, so closing comments from Ichandi. What is going to be the extent of volatility this year which we are likely to see? We've not seen any volatility excepting the month of December. 2022, will it be back to that traditional volatility, 15-20% swing, 20-25% swing? Is that happening this year?
I mean, I definitely think we're in that camp. Number one, very hard to predict macro. So, this is something that we wouldn't want to be able to try to even predict, because it's very hard to predict and talk macro. And also because macro has very little meaning in our lives. We've now been a 12-year vintage fund, and we've been through the 2011 to 14 massive drawdown / bear market where everybody had given up on India. I remember people were talking about leaving the country, getting their money out of the country. Nobody wanted to remain here. There were no prospects. Then you saw demonetization. Then you saw COVID. So we've seen multiple rounds of volatility and very sharp and deep volatility. I can only tell you, we look forward to more. We don't really worry about such things because, it only creates more opportunities and new leaders. Right? I think companies, the entire COVID crisis created the IT pack. It created a new set of opportunities. Who would have thought this would have happened? So I think we are in the camp that, look, the market doesn't fall more than 10%, more than maybe 5 or 6 times in a decade, right? 10 to 20%, 5 or 6 corrections in a decade. And maybe once out in a decade, you get a sharp correction above 30%. It's not common to get such corrections. But when these corrections come, you got to be ready and prepared to do the hard work and, have some dry powder so you can invest even more. Because like I said, the last 10 to 12 years have worked out beautifully for investors who've continued to invest money and taken advantage of volatility. So no shortage of it. It's going to be the same always. But I don't see any massive correction on the board.
Okay, Varun and Charandeep, we're going to let you go with that thought. And I might like to add, I'm red with envy just hearing all your travel plans and how you folks have been working from Goa. Let's see how all of this unfolds. But yeah, I'm a big votary and a big fan of work from home. Happy New Year again. Thanks for joining us live.
Happy New Year to you.